Great. Hello and welcome to episode XX. That's episode 20 of the Money Talk. This little experiment that we started in the lockdown is now 20 episodes old. And honestly, I know I say this almost every episode that I have so many amazing people to talk to, but today we've got somebody who's brought a sea of change. In fact, an entire story of perseverance. Somebody who thought 20 years before what India really needed, and now he is at the forefront of the venture debt revolution in India. So, without further ado, I welcome Ajay Hattangdi, the managing partner of Alteria Capital, to the Money Talks. Ajay, welcome.
Thank you. Thank you for having me. Thanks for those kind words too.
I don't even think I could describe it all, but Ajay, you and I met completely by happenstance, met through Anshu. We were just talking about him a little while back, and we met for the first time at CCI. And I don't know if you remember, I was wearing a sling at that time, trying to eat from my wrong hand, and we were discussing everything, and from gluten-free food to drinking Old Monks. But it's been a long time since we had that conversation.
It has. It has. It's been a good.
So Ajay, I think I don't know where to start, but I'm going to start maybe with just talking about your journey, right? You graduated from University of Buffalo and did your MBA in financial institutions and markets, and then you came back and you joined Citibank for 12 years. You were at Citibank, and you started out as a VP in operations. What was the experience like? I'm guessing at that time working for an MNC, right, was like the dream job. But was it everything it was made out to be?
Not initially, no. Well, I went to do my MBA in the US in '92 when India was just about opening up, right? And I was, I think, one of those few people who went with the intention of coming back to India. And everyone else that I went with, all my friends, all my batchmates, all went to the intention of staying back in the US. And I remember taking this conscious decision. And in '94, as I graduated, I got an offer from Citibank to come back to India, which is what I wanted, and to join the corporate and investment banking group. And I can tell you, I had very different expectations of coming into Citi, because I always thought it's this big global bank, and I'll come in and do M&A and things like that. And I came in and I was asked to go to my office, which was then my office for the next 2 years, which was the custody services business, which was then going through a boom. And in those days, custody was basically when you sold or bought shares, you'd actually have people come and deliver shares to you or pick up shares from you physically. And you'd have those transfer deals that you had to sign and so on. And we were serving institutional investors who, sold 100,000 shares or bought 100,000 shares. And guess where those 100,000 shares came, right? They came and sat with us. So we had the unenviable task of sitting and counting them and, verifying them. And it was a high stress environment in what was then essentially a windowless office in the basement of a building in Worli. And that was my introduction to global banking. So it was certainly a trial by fire, I can tell you that. Managing a team, you're 24, you're entrusted with a team of 10, 11 people. You have incredibly high volumes, high pressure. If you make a mistake, shares would go into auction and then they would come and sit on your head about it. It was quite a challenging time, I can tell you that.
Oh man! And would you imagine, 25 years, or maybe let's say 24 years since then, we still buy and sell startup shares, on paper.
Pretty much the same way, exactly. But you learn a lot, and I think that kind of experience really sets you up for pretty much anything and everything you can do in your career after that. You go through really an environment where you have to have trust with your team. You have to have, first of all, belief in your own abilities to manage through that tide of work that comes at you at 7:38 every morning and refuses to leave even at 9 o'clock at night. But it sets you up in a nice way. It gives you confidence. It teaches you the value of teamwork. Teaches you how to handle and be cool in a high pressure situation. And those are life lessons, you take with you wherever you go. So great experience in hindsight. it is an adventure in hindsight, not while I was going through.
But I would imagine, I mean, you obviously were doing something right, because when it came time for you to pitch a brand new idea, and we had talked about this at lunch that day, you went and pitched an idea completely far ahead of its time. I mean, if startups were far ahead of its time, your venture capital idea was far ahead of its time. But you were talking about giving debt to new companies, right? Or not the new companies at
Yeah.
that time, we call them startups today. But where did the inspiration come from? And can you walk us through how you got your way with Citibank on this?
Yeah, so I sort of went through, various groups within Citibank, and in 98, 99, I found myself in the corporate bank, which is basically the term, the phrase for people who manage relationships with corporate entities. And it's also a relationship manager. And in those days, we had a very highly matrix structure within Citibank. So you had people who actually handled a corporate account, which you'd be
Okay,
responsible to mine, be the face of Citibank to that corporate. And then you had an industry vertical structure. So you had 7 or 8 large industry verticals. So you had, metals and mining as one. You had power as one. You had, manufacturing as a broader term. You had automobiles and so on. The one segment that we had that was missing, that was creating a lot of ripples and interest in India at that time, was the information services and the IT, the technology part of the business.
hmm,
And in 99 2000, I don't know if you recall, but McKinsey came out with this really important study along with NASCOM that showed how the IT industry in India was going to be this mega, $87 billion industry by 2020, and you'd have $50 billion of revenues and imports and so on. Sorry, exports, and it was basically the moment when the whole future of what Indian technology was going to be like, that was revealed. And Citibank sort of took a look and said, look, we don't really understand how to look at software companies, right?
hmm,
Citi was very good at understanding how do you underwrite, how do you understand the credit risk in companies that, made steel
true.
or made automobiles, right? And what kinds of products and services a bank you could offer those companies. But software was really an unknown industry. And so they decided to constitute this 8th vertical, which was called the technology vertical. And they decided to give the junior most guy on the floor, which was me, responsibility for that, because nobody else wanted it. And it was this really small, tiny, unknown industry, right? And yeah, I loved it. And it was great because I naturally sort of gravitated towards technology. And the next, year or two of my life was some of the most interesting times, because I got to meet some of the large startups, large corporates. So I went into an Infosys, I went into meet Wipro and so on. And then you came out and you went and met a startup. And remember, in
Right.
99, 2000, startups were big, right, at that point. And I got to see really tiny startups and really large companies in the same day. And a lot of startups at that time were talking about how there's a slowdown coming in. Investors are beginning to take their foot off the pedal, and this whole bust was about to happen, if you remember the whole
Yeah.
dot-com bust. And so a lot of startups, basically, as I went to meet with them, said, look, is there a way that Citibank can provide us with some financing in the interim, because we think VCs are going to come back in a year. Give it a year, give it 12 months, 18 months. And my first reaction was that doesn't work. But I kind of decided to research it a little, and I came upon this very interesting idea called venture debt by a bank called Silicon Valley Bank. And I saw the model. I remember, and I said, "Wow, this is incredible! How a bank can build an entire its entire business around startups, being the beacon for startups to say, when you wake up with a business idea on your mind on a given Tuesday morning, we should be the first port of stop for you, because we're the bank that can introduce you to the club of venture capital and what it means to be
So
a
true.
startup, right? And I thought that was phenomenal, but I didn't quite understand the basis for how they evaluated startups. That was completely unknown, and it's like a black box to me. But I kept sort of plugging away at it, saying, how do you really evaluate this? And I remember this one fine August, so August 20th, 2000, 3:30 in the afternoon, and I can tell you precisely that point. I came across this presentation by an Israeli venture debt fund called Plenis Technology Ventures. And it happened to come to me quite by accident. And I came upon this presentation and it said venture debt for emerging Israeli companies. And I said, wow, this is it. This is what I've been looking for. This is how you do venture debt. And that presentation talked about how venture debt is looked at, how it's evaluated, how do you underwrite. And that was my kind of aha moment. And I came back to my wife that evening and I said, one day I'm going to do this venture debt thing. So I joke with her now that, people use epiphany moments in life to solve diseases, right? Cures for diseases. I found my epiphany to find a financing product. How shallow is that? So, that gave me an incredible sort of a bolt, right? And the first thing I did is I put together a concept paper within the group and I took it up to my corporate bank head and I said, look, this is what we should do. This is how we should do this business. And he said, okay, interesting. And it went up and it went up. And finally, it went to the credit head and the CEO of Citi, who said, look, it's a bad idea because we've never done venture debt. And, this is, in fact, I was taken to the side and said, don't ruin your banking career by proposing harebrained ideas like this. What kind of a bank would lend money to a startup, right? I mean, what bank in your right mind would do that? In hindsight, it was a good thing I got rejected then because then the bottom fell out of the market, right? And if we had done deals then, it would have been disaster. And so fast forward now from 2000 to 2004, and I moved on. My stint in the IT, industry as a vertical head was good because we developed a whole bunch of other financing programs. We did a whole bunch of leasing. In fact, even we did some software leasing programs, which was never heard of before that. So that was interesting. In 2002, I got moved to the auto industry to take over the auto industry as the auto industry head for India. But this idea of venture debt still remained with me. And this is the back of my mind. Right? In 2004, I saw these headlines one fine day in a newspaper that said Warburg Pincus is to relocate their Asia headquarters from Singapore to India, because India was then expected to be the next sort of, horizon for where venture debt would be or venture capital would be. And so I went to meet with Warburg using my Citibank visiting card. And I said, look, there's a guy called Pulak there who's now running very successfully another fund. And I said, look, is there a company that you would like for me to look at if I could do debt, venture debt? And these are broadly the terms I think I could do them for. He said, absolutely. In fact, there's many other companies that we would like to do. And so that gave me the idea that at some point in time, venture debt was going to be big, especially venture capital in India was expected to grow. And so then I went back. This was May of 2004. Okay. And look, you've got to understand, I was then doing well in Citi. I was the auto industry head. Things were going well. And I had this, experience from 2000 where I was basically told very unceremoniously that I was ruining my career in Citi by proposing things like venture debt. So I was really in this moment where I was uncertain. How do I do this? And do I really want to expose myself and go and make this a big deal again in the bank? And I said, let me educate myself, right, before I go and open my mouth. So between May and about August, I reached out to over 100 people in the Valley and saying, look, you don't know me, but would you mind spending a half an hour with me to explain what venture debt is? And I have an idea that we should look at doing it in India. And they'd be amazed at how many people responded to me and gave me time, right? And they were just people who just said, sure, what about Tuesday, 2 o'clock? And now Tuesday, 2 o'clock for them in California time was, in like 3:30 in the morning for me sometimes, right? But I would take those calls and I would do my Citibank work by day. I would come back in the night, take a nap, have my dinner, and then start my calls. And I would do calls sometimes till 3, 4, 5 in the morning. But it was fabulous. I mean, I had such a great learning experience, learning from folks who've been doing it and been in the industry for a long time. By August, I had a sense of how to do this, right? And I was fully confident in the fact that I know I can do this program and I can do venture it successfully. And so I went and approached, I said, you know what, if I'm going to get blown off, I might as well get blown away by the CEO of Citibank. I won't settle for being blown away by anybody else. So I took time with Sanjay Nair, who's now with KKR. And Sanjay was then CEO of Citigroup. And I gave this idea to Sanjay, and Sanjay surprisingly didn't sort of bat me off from his office, but he, spoke to me, but he said, "Look, you've never done venture yet, right? City's never done venture, and venture has never been done in India. So three strikes." So then I jokingly said, "Well, I play cricket, I don't play baseball, so you've got to get me out 10 times, something like that." But the point was made that you're never going to be able to do venture debt in city. But nicely enough, he said, "Look, do another version of it and come back, do some more research." And I actually took it as the honest truth. So I went out and did my research, came back with another version in September, another version in October. And finally, in November, I went to the US saying, "Look, this is not going to happen. I'll go to the US, meet all these people I've been speaking to, and find out whether they would be interested in financing a venture debt business if I could start one on my own." Right? And stop me if you like. Okay, I can go on talking about this for.
I'm absolutely loving it. So
So I went in November, and everyone I met said, "Look, it's a great idea, but India is still early on the venture capital scale, and
sure.
you've got to let the industry develop, and you've got to let VCs come in, and you've got to let the VCs build their experience, and then you've got to partner with the successful VCs. That's what makes a stable venture debt business." And what did I hear? Right? I heard people saying, "Fabulous idea, go do it, and we'll fund it." Right? That's the first law of research. When you've got a certain given end in mind, you'll always find things to reinforce that.
Confirmation bias.
So absolutely, to the hilt. So I came back and I scared my poor wife by telling her, "Look, I'm going to leave city and I'm going to do this, and I'm going to set up my own fund and I will start venture debt. And there are people who've told me they'll invest in me." And at that time, we had twins. My wife had just given, we had twins, and we had they were 2 years old, and my wife had given up her job, so we didn't have, we didn't have a job. We had an apartment we were staying in, which is a Citibank accommodation. So she said, "Look, think about it. If you leave, I don't have a job. You don't have a job. We don't have a place to stay, and we've got twins 2 years old. Are you crazy?" And to me, it just seemed like the most obvious thing to do, right? And it's like all kinds of sense of rationality leaves you because you've got this idea so embedded under your skin that you have to do it. It's like
true.
something that is
But
uncontrollable.
you have to get out of bed and make it happen. I mean, if you can't, if any entrepreneur, right? We call ourselves venturepreneurs, but when you just feel you just can't do anything else but what is in your head, you got to do it.
Yeah, and it's like being like a fool in love, right? You take extraordinary risks for things that you never know if they will pan out the way that you hope they will. And so, well, I gave myself till Feb to quit. And 1 week before I put in my resignation in Feb, I got a call from Sanjay Nair again saying that, "Look, we have a 2-day workshop where his boss and the entire contingent from the head office in Hong Kong was descending on India to do a plan for the next year." And the idea was that the second day, the last lot was a strategy session where they wanted to talk about new product ideas. Right now, they didn't have a whole lot of new product ideas. So Sanjay tapped on me and said, "Why don't you come present your idea?" So I said, "Sure, what have I got to lose?" I was 1 week away from leaving my job. And to my luck, so I go into this room. They had hired the room at the Hilton. And I go in and there were literally 40 people in the room from all the senior heads of businesses across the region. And I was given 15 minutes to present. And my opening slide was venture debt for emerging Indian corporates. And the CEO for Asia Pacific, guy called Robert Morse, basically stopped me and said, "Hang on, is this what Silicon Valley Bank does?" And I said, "Yes, it is. How do you know that?" So he said, "We had actually recommended that we buy Silicon Valley Bank in 2000. He had recommended, right? So he knew about the business. But then he said in 2000, the bottom fell out of the tech business, and we decided not to progress on that. But I spent a lot of time understanding the model. I think it's a great model, and I think if you want to do it, you should absolutely do it." And so right there and then, I got my chance to start a venture debt
Opening
business.
slide. Didn't even go through the presentation.
Opening slide. And then the entire presentation was then an hour. It took an hour. It was supposed to be a 15-minute one, but I pretty much had buy-in from the opening slide before I went into slide one. So, and then that's how it got started. It started about 5 years later than I expected, but it did start. So I'm lucky. I'm really lucky for having done it.
But it's such an amazing story to persevere because most persevere, especially in something the behemoth size city of Citibank, right, and Citigroup for that matter, and to say to persevere to be there, and I think you stuck around for another 4 years after that, working on this
Another two
product.
years.
Another
Another
two
2 years.
years,
So I ran the business for another 2 years before I left to start Silicon Valley Bank's business in India.
and that's amazing. I mean, I guess to the people that are listening in, before we talk about your obviously your entrepreneurial experience or the entrepreneurial experience at Silicon Valley Bank and so on, what do you take away from your time at Citibank, and how has that helped you in your current you know job role as a entrepreneur?
I think one of the things that a bank like Citi does is instill discipline, and it instills process, and I think that's very important because if you don't adhere to a process, you tend to get spread out too quickly, too easily without guide rails. Um, and I think that's one thing that I think I certainly picked up from Citi. The other is I think Citi does a great job of placing a lot of responsibility on people very early in their careers. Right. I mean, I was, for example, when I started, I was 24. I was given this team of like 10 people, 10, 11 member team, and I was literally thrown into the deep end of the pool at a time when volumes are going through the roof. And I cannot imagine any other bank kind of giving you that level of entrusting you that level of responsibility and
Yeah,
authority. And I mean, to think that, I mean, coming back to the whole venture debt approval, right? I mean, look, I would never have in a million years been able to get this approved anywhere else. I can tell you that. And I think it's a great testament to in a sense, the entrepreneurial spirit that Citibank breeds among its people and its culture. It's a competitive culture. I mean, some people say it's got, you have to have very sharp elbows to be in Citi. But,
mm,
that's what you get when you hire good people and you put them in a highly competitive environment. You get performance as well. So I think those are some of the things I think I took away, other than the whole team spirit part, which is also very important. And in a strange way, in custody, for example, in our first 2 years, we were going through hell. Okay, and we were a bunch of about 50 of us going through hell together. And those kinds of those incidents really create a very strong bond. And most of my friends today are still from that period in my life when we went through hell together.
well,
Uh,
I remember my father ran a stockbroking business, right, and I remember like at night he would just have these green colored forms, and there were these long forms.
transfer deeds.
Yeah, and you could not make one mistake, right? Because that means, like you said, all hell would break.
Exactly.
And I was
Exactly.
I was a 9-year-old trying to figure out what my dad was doing with all these papers all the time.
Yeah.
But you obviously the stint got over. You moved on to Silicon Valley Bank. In many ways, I think there was a meeting of the minds because you were trying to build Silicon Valley Bank in India, and suddenly Silicon Valley Bank is what called you out. So how did that happen? Starting out at Silicon Valley Bank, what was the thought over there? And I believe that then turned
Yeah.
into Innovate.
No. So yeah, and so when I was at Citi running the venture debt program, right? There's one thing I was very clear about, that this was not something that Citi was good at, to take this kind of risk. While they did give me the approval and they were very supportive of me in the initial few years, I mean, my concern was more about the fact that the approvals really stemmed from having, Sanjay Nair and Robert Morse on my side, right? And they were batting for me, they supported me, and that's the reason I had the program. But I was concerned about the day that they decide to move and what it would mean for me and my future running venture debt.
Absolutely.
And I decided that if I really believed in the future of this business, then I needed to, irrespective of how comfortable life was for me then, to take the step of either going out and going back to plan A, which was to do my own fund, or in the absence of that, join hands with someone who really understood this business. And to me, Silicon Valley Bank was the best partner I could think of, because they are the 800-pound gorilla of this business. Okay.
Very
I mean,
true.
to give an example, one half of every of all startups that raise VC funding in the US bank with Silicon Valley Bank, even today. Okay.
50%. Wow. That's a huge
Happy to
number.
say, right? And they've done a phenomenal job of that as a franchise. And so I remember. So I've been connected with the gentleman from Silicon Valley Bank, Ash Lilani, who runs Sama Capital today, uh, through my research in 2004. If you remember, when I was reaching out to people in the valley, and he connected with me, gave me time, explained to me, and kind of helped me and mentored me from the outside, even while I was setting this up at Citi, helping me to think through things and things, right? And he was at SVB, July. I remember right after the deluge happened in Mumbai, if you remember that time,
Okay.
around 6, 11, right? Sorry, it's on, it was July 26th, I think. June, July
Yeah.
26th. Yeah. And in any case, the week after that, I was heading into office, and it struck me that, look, I have to do this. And I pulled over to the side on Tulsi Pipe Road. I remember pulling over to the side of the road and I calling Ash and said, Ash, I have taken a decision. I'm going to leave Citi to set up my own fund. So he said, wait, have you thought through it? And I said, well, not beyond the point, but I think that this is what I need to do to make the next transition into having control over this asset class and running this forward. And this was on a Friday. So he said, look, give me time till Monday. Don't, have you told your wife about it? And I said, no, I haven't. He said, well, then don't tell her my advice. Think about it. We'll talk on Monday before you give her another shock. And so Monday he calls me back and said, what have you thought? And I said, well, I'm going to leave Citi. He said, do you have another offer to do something? I said, no, I don't. I'm just going to leave Citi and then think about how I want to start my own fund. He said, see, I've got an idea for you. Silicon Valley Bank has not so far invested outside the US. We didn't actually have plans to do venture debt in India. So if you want to take a chance, why don't you come and join us? And then you work with me to get to a point where we would be able to present to the board of the bank at their strategy offsite in May the following year. And if Silicon Valley Bank agrees to start an India business, then you can help us start that business.
Perfect. Yeah.
And if SV doesn't give you the approval, then you can go your own way, and you've not lost anything for that time. So I said that makes sense. So I left and joined Silicon Valley Bank in November of 2006 with the idea of presenting to the board in May 2007. And I shuttled between here and the Valley, writing the business plan up and doing the notes and stuff. And fortunately for me, in May of 2007, Silicon Valley Bank agreed to start an India business. And they kind of entrusted me with $50 million to start the business with, which was a huge leap of faith, right? Because they didn't know me. They knew Ash, of course. And Ash kind of stepped up for me and said, look, we'll do this together. So I had, the ability to then start my own fund, which is then the NBFC, which is then called SVB India Finance, which I then subsequently started in 2007, 2008. With capital of 50 million as kind of the first business that was dedicated for venture debt in the country, which, as you said, then we did a buyout of that business in 2015 and changed the name to Innovent Capital.
Yeah. And it's so interesting. In 2008, I think that's I think when Chirite's first fund also, or IDG as it was called back then, that's also around the same time was when Chirite was starting out, and nobody really understood VC in India, right? I mean, you literally were against the grain, How give you that?
No, so sometimes now, right, in hindsight, I look back and I was like, what was I thinking doing this in 2006, 5, 6, 7, 8? When, in 2005 and 6, there were literally 4 VCs in the market, right?
Yeah.
And I mean, it's not that people in the US didn't tell me otherwise. They told me this. They said that there's no VC industry as yet. You got to wait for it to happen. It's just that I had this idea and I ran forward with it. I carried this and I ran, right, irrespective of whether there was a race or there was no race, I was running. It was not easy, right? I mean, the first several years, I mean, even into 2009, 10, and so on, education was a large part of what we ended up doing initially, right? Market education about what venture debt is and why does it make sense for something as harebrained as a startup that's burning cash to take debt on top of everything else, right? And how can that be a sensible thing for a lender to do? right? And why does it make sense for you, Mr. VC, to consider for your investment companies, for your portfolio companies? So that logic, it takes time. See, I think the folks who get it are the founders who want to save dilution and therefore want
True.
to take debt instead of equity. That equation is easy, right? The equation that's harder is to convince the investor why it makes sense for their portfolio company, which is a fledgling startup, why it makes sense for them to take debt, and in their eyes, increase the risk of catastrophic failure. Right?
True. True.
So there's a lot of time that you have to spend on the market education part, but that's always hardest for the first few people that do something new in a market.
And what was the first deal? Do you remember the first deal that you did as?
So yeah. So in SVB, my first deal was a company called Prism Payments, which was then subsequent Prism Payments,
Okay.
Sequoia funded company that was then subsequently acquired by Hitachi. And interestingly, for me, the founder team of that company was a team that I had known from my technology head days in 2000 when they were running NCR machines, the
Okay.
ATM machine. And I remember getting into very, very involved conversations with Loni, who's the CEO that time, about why he should take ATMs and build a leasing model on top of on ATMs, right?
Okay.
And this is when he was at NCR, and saying that we'll finance the leases, you build the equipment or you build the ATMs, lease them out to banks, and we'll underwrite the leases and we'll finance the leases. And interestingly, that model is what was at the heart of Prism Payments when Prism Payments was created. So I'm not saying I gave him the idea. I'm just saying, Tony is listening to it. He owes me a little bit of royalty for that.
Sometimes I have fleeting thoughts. Suddenly, the entrepreneur just suddenly, it's an idea, the execution completely on him. But
No, I mean, it's.
But
No, I'm just saying. I think ideas. Sorry, I just want to say the ideas are plenty, and what I was proposing at that point when I was in City was not very new. But it took the team at Prism. It took them immense amount of patience, time, and effort to get the model working and execute. Right. So, 100 on 85 for them to have taken the model to where it went.
But the interesting thing on that also is that when Silicon Valley Bank in the US is as powerful or as deeply entrenched is because it's also a bank. It's where startups can actually deposit checks, right? And they operate as a bank, and then obviously then looking at your cash flows, they also give you money, right, and lend out money to you.
Right.
When I started business in the US in 2009, I didn't go to SVB, but I went to Bank of America. And it took them literally 48 hours from the time I opened my business banking account to give me a line of credit. Now, Ajay, I've been in India for 10 years, and I may not be a very big guy, but I'm maybe a decently known guy. The bank won't give me a credit card today if I don't give them a 5 lakh rupee fixed deposit. I don't get a 5 lakh rupee credit line, right? Which is what the case is today. So 2008, I could imagine was completely different, and you weren't really operating a full scale bank. So did you have any plans like at some point this was going to open up and I was going to really become a full scale bank, or was the idea to remain as an NBFC?
No, the whole idea from the very first time I looked at this Silicon Valley Bank model, if you remember in 2000 when I first described that to you, it was always about how do you create an entire banking approach to banking startups, right? It's not just about lending money. It's about what else can you do to help support startups. And so my, the blueprint that I presented to Silicon Valley Bank's board in May of 2007 was not about just creating a lending business in India. It was actually creating a lending business as a way to begin to understand the market, to build the brand, to build the engagement with the regulators, to build the track record with the investors. And then as the banking regulations in India, which was still then relatively closed, when that environment opened up, the plan was to then put in an application for a full bank license, right? And eventually then become a Silicon Valley Bank in India. We actually did that. And we did that. I applied for a banking license on behalf of Silicon Valley Bank in 2009, which was subsequently rejected after 2 years because of various, how should I say, US India reciprocity issues. Right?
I see.
So if the US regulator does not give Indian banks licenses to operate freely in the US, then then why should the RBI be expected to give American banks license in India? I mean, it's a point of view, certainly, right? So the point, though, however, was that we were always planning to be a full bank franchise here across the board. That was always the intention.
I'm surprised that 15 years, 20 years after people must have seen Silicon Valley Bank, Indian banks still, in my opinion, do not really support entrepreneurs the way they're supposed to. I mean, I can give it's a very recent example. To change an email address just to where my statements are supposed to go, I had to send a guy to the bank with a 2-page form to say change this email address from here to here. I won't name the bank because we were all on a live show, but probably the guy was sent back saying send the guy whose email address has to be changed with his Aadhaar card to prove that this form was submitted on his behalf to change his email address. I was like, I don't know which world are you living in, right? But do you see,
Yeah.
and a little bit off topic, that there could be space for now a proper bank to come in, right? Because I don't think startups today are getting served well by the bank.
Yeah, I think it's a little bit of a difficult proposition to start a bank afresh now. Also because there's lots of inefficiencies in the way that the capital structures are built, right? I mean, you have your cash reserve requirements, you have your priority sector loan targets, you have your SLR ratios to maintain. And literally for every 100 rupees that you have, you've got about 30 or 35 rupees locked up in various kinds of requirements of this nature. And then you've got to somehow make money on the balance 65 rupees to get you your ROE and ROCE to be a viable business. So there are challenges in how you can set up banks, in my opinion, today. And it's been a while since I've looked at the regulations more carefully. But I think there's some interesting things that are happening today on the fintech side that allow you to cobble together through partnerships and alliances a way to kind of simulate that in some ways. And ultimately, what are you getting to? You're getting to a set of products, services, offerings across a spectrum of requirements or needs, which then help a startup in various things, whether it's fundraising, whether it's liquidity management, whether it's in business development, right? So fundraising, so on. I think as long as you can provide different parts of that through an alliance, I think you can achieve similar kinds of outcomes. But you've got to be clever in how you piece it together to make sure that the efficiencies work together as a unit.
Right.
So right. So I think at some point I'm optimistic that that there will be banks who will play a more enlightened role in this, right? And I think it certainly needs to be, because you're not going to get there's only so much that just lending can take you,
True.
right?
Very true.
You need so many things to happen for a startup to get the kind of support it needs to go from being a startup to being a growth stage to being a large successful company. And you need support of all kinds, various kinds, through the life cycle of the company.
No, so true. And we'll talk a little bit about Innovin. I know Innovin came around when Silicon Valley Bank got bought out by Temasek, and you were there for 3 years through the transition. In fact, when I came in, I had heard of Silicon Valley Bank, and interestingly enough, I had a few friends from school working with you at the time, and they would rave about you. And I've heard so many great things about the amazing culture that existed at Silicon Valley Bank, which you've obviously taken forward and brought it over to Alteria. But because there's so many founders here today, and it's so important because you're in such a tough business, trying to apply for a banking license. You've got this entire team of people all looking up to you, hoping that this is going to become a bank someday, because that's their dream, that's what they want to do. And you got to maintain awesome culture while you deal with the full brunt of India's, red tapeism and all the other issues that exist. How important is that culture in your opinion when you're building a venture?
Oh, absolutely critical. Number one thing that you can do in your firm is to build culture, because as the saying goes, culture eats strategy for breakfast, right? So you can have all the best laid plans, but if you don't have the right culture and the right team, there's nothing that you can achieve. So to me, from day one, the focus was on creating the right kind of culture within SVB, within SVB India. In some ways, I was lucky that I had, the core culture of Silicon Valley Bank itself to kind of rely on to create a template here in India when we were doing it. And the culture starts with, um, I think one is, to make sure that you hire the best people and not be afraid to hire somebody that you think is smarter than you or more capable than you in certain areas, right? Because it's interesting. Maybe digressing here a little bit. I remember seeing a book on advertising by David Ogilvy, right? When I was a kid growing up in my home, and there was an interesting picture that he had of these little babushka dolls or matryoshka dolls, that you call them, the Russian dolls that nest inside one another.
Hmm.
And apparently, the legend goes that when he hired somebody new in the team, he would always put a set of these babushka dolls on her or his desk to welcome them the first day at work. And the message was that if you hire people that are smaller than you become a company of midgets. But if you hire somebody bigger than you and important than you, you become a company of giants,
Yeah, giants.
right?
Very
And
true.
I think it starts with hiring the right people, hire smart people, good people, and then you need to entrust them and leave them to do their job. That's one, right? The second thing um, is we tried very hard to do away with what we call intellectual hierarchy within the firm,
Hmm.
right? So there is no intellectual hierarchy. To me, just because I am a managing partner in the firm doesn't mean that I'm smarter or better at something than an associate. Now, I might have more years of experience, and I can certainly look at a situation, and there's very few situations that haven't already played themselves out in the past 15 years I've been doing this. So that weighs for a lot, I guess. But there's always a fresh perspective that somebody new coming in brings. And I think if you surround yourself with people who only agree with what you say, you create this inability to see different sides or different perspectives of the situation that you're looking at.
Very true.
And
Yeah.
it's incredible the number of times that a junior person has pointed out at something and he said, you know what, why are we doing it this way? It's only because we've done it this way for the last 3 years, but why don't we just break the mold and think about something different? So I think that's very important, the ability to have intellectual hierarchy or lack of it. And the last point, we can go on, but the last point really is to understand the difference between aggression and arrogance, right? So you can be aggressive in the marketplace without being arrogant about it.
Hmm.
And to me, that goes to the heart of, I think, being a good human being and a good person, right? And you don't need to be an arrogant person to be good at your job, right? So somebody can say, look, that guy is dogged about how he does stuff, how he goes after business, how he brings in clients. He's great, he's aggressive at his work, but you know what? Softest, gentlest, most nice person you can be, right? And that breeds its own aura, it breeds its own karma in some ways. And I think that is very important to have. So I think overall, it's hire good people, trust them to do their job, don't micromanage people, have this ability to let everyone's voices be heard. And respect at work to me is exactly that. And sometimes um, having the ability for somebody to have their voice heard is very important, right?
True.
And it's so democracy doesn't mean that everybody votes and it's the average of all votes. Democracy means having everybody's voices being heard, and I think that's important to do as whether you're a unit leader, group leader, whether you're a company CEO. It's always important to let everybody's voices be heard.
Before we get into Alteria, I'll ask you a little bit of an uncomfortable question for many founders. Because protection of culture, if you want to hire good people, it also requires you to let go of bad apples,
Yes,
right?
yes.
And maybe you could tell us, because in 15 years, I'm sure you had to let people go, and how important has that been for you in protecting this amazing culture you've got, and all the people that you I mean, all the people you met are still working with you or are leaving their jobs and still joining you. So how important has
Yeah,
that been?
it's look in every relationship, right? Whether it's and I mean this in every relationship, whether it's your personal life, it's your professional life, whether it's your partner at work, whoever, and you always have to have the ability to have hard conversations with them and say no, right? Sometimes no is no. And the strength of a relationship is actually how much you can have an honest conversation and not just the sweet, gentle conversations, right? And when somebody is not performing in your unit, sometimes it's just about the fact that they're interested in something else that they're not built for, or they're not built
True.
for what they're doing. They're built for something else, right? And I think
True.
it's important to understand, what is this person dealing with that makes that person not effective at what their work is. And sometimes it's saying, look, why are you here? Why are you in a lending job? And I can tell you, people have left this and done, other things. They've done, they've done more creative stuff. There's a colleague of ours who recently left to go and do a more, to join textile, designing, right? And look, if you see that person now, you'll see how much happier they are doing
Absolutely.
what they're doing rather than being inside an office doing a spreadsheet, right? So the hard conversations are not hard if you make them about the activity and the interest rather than about the person. So you need to be able to separate out the person from the behavior and point out that the behavior is not acceptable. And many times it's also possible that the person just needs an added amount of insight or incentive to look at in a different way for them to get recharged about what they're doing. Sometimes it's just plain bad, and in that case situation, it's a bad performer or it's just not working out. I think it's best to call it quits and move on. You can't be
Yep.
everything to everyone, right? Fortunately, we've not had that experience, but there are instances, I'm sure, where people just don't quite cut it. And then the best thing you can do to both that person and you is to cut it and move on with life.
In fact, I mean, I was reading this book, The 3G Way. It's got this one chapter that says, by not letting people that are not performing let go, you're actually doing a disservice to them, because there'll be a time
Yeah,
somebody else comes in, blazes through, takes over their job, takes over all the promotions, and now you got to explain to the guy, listen, you got to go because guess what, your job, whatever your career progression is, it no longer exists. Right now, he's got to go retrain. He or she has got to go retrain themselves for a new job. So might as well let them go early, like you said, cut them off, cut them loose, and let them go find their own sky for that matter. So with
absolutely.
that topic, we'll come back now to Alteria. So 13 years after you want to do a fund, 13 years after you're going to scare your wife, right, on that Friday. I'm guessing was it probably another Friday when we decided, what, I'm done. This is I have to go ahead and do this fund, right? 2018, you founded Alteria Capital, right? And this time this is the proper venture debt fund. You raised over 1,000 crores for this fund. So tell us, what was that? When what was that trigger? What happened that you decided, what, this is it?
Sorry, I'm not able to hear you.
Can you hear me now?
I've lost audio here.
Can you hear me? Can you hear me now?
Can you hear me?
Yeah, I can hear you.
I can't hear you though. Sorry for that.
One second, let me see. Can you hear me now?
I don't know. I'm having some glitch here. I'm not able to hear it. Now you're on mute.
Can you hear me now? Hello? Can you hear me? Wait, I'll try to. I'm back. Hi, Ajay. Can you hear me now?
Yes, I can. I can.
Okay, okay. No, so what I was saying was, 13 years after that Friday, where you decided you were going to scare your wife in 2005, 13 years later,
Yeah.
you finally decided to, follow through with that promise. I'm guessing it was a Friday as well. But what was that you decided? You know what? I'm done with Innoven. It's time to go out and branch out on my own.
Yeah, I mean, I think it is just the challenge of kind of doing it in a fund, on your own. And I think it's always been sort of plan A for me in some ways, right, going back right to my days of exploring this, starting from 2004 onwards. So 2015, when we did the transition, we did the buyout of the business from Silicon Valley Bank to bring in Temasek and UOB Bank. We renamed the entity as Innoven. I think for me, what was interesting was the opportunity to start venture debt in Singapore for the Southeast Asia market and in China. So the next 2 years, in addition to the responsibility for India, I was also looking at setting up China and other markets. My partner Vinod Murli was pretty much running India at that point. And I think in 2018, 17, I think for us, the next challenge was really to go and raise our own fund. Right. By then, at least personally, I had done venture debt in a bank. I had done it in an NBFC. I had done it in India. I had done it abroad. And now I wanted kind of the challenge of setting up my own fund in a sense and doing it. So I think it's just, in a sense, the last frontier in some ways for me to go out and raise a fund with Vinod. So I think, I think Vinod and I agreed to do this within the first 2 minutes or 3 minutes of broaching this conversation at the Bombay gym where we went to have a drink. But much has happened in these clubs in South Bombay, I can tell you. But that's so. I think that was, yeah.
What's interesting, both of us, both of our partners are both Vinod, and we both started in 2018 with our fund journeys.
There you go. Way too many parallels.
Yeah, I just raised one less. I had to raise one less zero than you. That's it.
It doesn't mean very much when you look at guys raising a few $1 billion.
Yeah, so true though. But to that point, you've set up Alteria. You've obviously been there for such a long time. But now, what does Alteria do for founders? Like maybe for the audience that is here, I'm guessing you don't fund everybody. So what do you fund?
Yeah, so we don't fund everyone. We fund, our target market is the subsegment of companies that have raised VC funding that are looking to fund further growth and taking debt as a way to minimize dilution rather than raising more equity for it. Right. So that's how we've defined our target market and our asset class of venture debt. So in a sense, we partner with many of the large sort of VC firms in the marketplace and finance their best portfolio companies. Right? So it's a simple business, and as a fund, we have more. In some ways, our fund is a specialty vehicle to do debt, to do venture debt. So it gives us a little bit more freedom than you have through an NBFC. Though an NBFC has its own advantages to a fund, right, and being able to leverage and so on. So that's essentially our business. But as I pointed out earlier, at least my personal sort of take on this has been that debt and funding is just one element of the entire support system that needs to be put into place to help startups.
Very true.
So we approach this as a capital plus connects kind of a proposition, which means that we try and support companies not just through providing them with debt, but we actually have a separate team called an Activate team. And the Activate team does some very important things. And the main thing it does is that it helps connect our startups in our portfolio with either large corporates, that help in building those kinds of relationships, or with other startups to co-develop programs with, or with younger companies that they can work with to supercharge their own businesses. Or in fact, we have a panel of about 17 service providers that provide everything from recruiting to IT evaluations to accounting and taxation help and so on. And so the whole idea is we have one team which is the deals or the transactions team, and we have another team which is the activate team, and the two teams work hand in hand to cover a given portfolio company, so that we are providing a more holistic approach to how we engage and support these companies. So
And so
that's
when does a
essentially an
founder
important part
know
of it.
that they should be? So when does a founder know they should be approaching you, or when should they
So
be?
multiple times, yeah. So for funding engagement, ideally at Series A or right after Series A, and then so we typically start engaging with companies maybe before Series A as it leads up to it, and then so we can close debt co-terminus with the equity round. But we also engage with founders and companies where there may not be a necessarily a funding objective in mind, but more a business support objective, right?
Okay.
So as I said, through Activate, what we also do is, and people can go visit our website, alteriacapital.com, and check it out. We have several mandates that we put out on behalf of some of the large corporates that we work with. So companies like Crystal or Marico and so on, who we work with to find and connect them with interesting startups in the ecosystem, right? And a lot of corporates like this basically want to engage with startups as a way to supercharge their own innovations and their own business, developments and so on. And a lot of corporates understand that they need to do this, but they don't quite know how to do this.
I
And
see.
so we work with many of these corporates to help translate those mandates at a strategy level down into actionable connections with the kinds of startups that can provide that value, right?
That's
And
a lot of
so
heavy
some of
lifting.
these mandates, yeah, I
That,
mean, look, we have technology now to help us with a lot of this, right? So we leverage that to the best we can. So, like I said, we do have many of those mandates put up on our website. So, companies that have, startups that want to look at those mandates and apply for them can go to our website and apply. And there's a Google, a Google sheet that comes up, and you can put in your details there. So I would say that we welcome engagement with startups of all types, whether they are VC funded or whether they're pre-VC funded. With the VC funded, obviously, there is the added element of being able to do debt financing for them. For pre-VC companies, debt is perhaps not recommended because it can improve or increase the odds of getting hit if you take debt on top of everything else that you're doing as a startup. But certainly, there are ways that we can engage with startups before Series A by connecting them with either large corporates or some of our own portfolio companies that they can find, business connections with.
wow. And I've also noticed that in our conversation that you also could become an avenue for certain startups to actually reach out to the VCs, because they're also coming to you and you're taking some of this stuff back to them. And so
That's right. That's right.
so if they want to reach out to you, Ajay, what's the best way to reach out to you?
Well, they can mail us at mail@alteriacapital.com or come visit us on the website and do a contact us and then come in through that route.
Great. And there's a Google form, from what I understand. There's a Google form. Just fill it out. The team goes through everything. Ajay is extremely, extremely efficient on email because I'm not as good as he is, but the email shoots out very, very quickly. So if you guys are interested in venture debt, and the next question I am going to ask is, why should founders prefer debt over equity, right? Because when equity is so freely available these days, why should they choose debt?
Well, equity is available, but valuations are not easy. I mean, look at the kinds of valuations that people are raising money. It's better to take some debt and defer equity rounds as much as you can. So, I mean, let me give you an example. I use this example a lot when I talk about venture debt. So, you have a company that raises 30 crores Series A, burning 2 crores a month, which means that a company taking 30 crores has got 15 months of life, right? The whole idea of the company is to take those 30 crores, take the 15 months of life it has, and to hit some milestones along the way, which then help it to raise a Series B at a much better valuation. But 15 months sometimes is not enough to hit those milestones. Sometimes the company might need more time or more money. And the last thing you want to do is to go into Series B fundraising before you hit those milestones, because then your valuations can take a real knock. So what we do is, let's say on top of 30 crores of equity, we can put in another 6 crores of debt, hypothetically, which then buys the company another 3 months of life. So it extends runway from 15 months to 18 months.
Yeah.
And those 3 months could sometimes be what the company needs to hit milestones and get valuable. So taking debt is a more, it's kind of like insurance in a way, right? So it's the insurance against running out of money too early. So in some sense, your company is growing 50% a year, you're much better off taking debt and paying 15, 18% interest, because you're then saving the difference between your rate of growth of 50% and the interest you're paying on the loan, which is all left for the founders and the VCs. So it's a much better value proposition to use some debt. But again, debt does carry the obligation of repayment. So when you take debt, you have an obligation to repay, which you don't as equity. And so the relative benefits of equity and debt have to be looked at to decide what the right combination is of equity and debt. So when we provide debt, it is not to replace equity, but it is to enhance the cash reserves you build by raising equity.
And I'll take one audience question, I think a very relevant one considering the topic, is that what are the filters startup need to pass to get venture debt from Alteria?
Yeah, so I think it's multiple filters. I mean, the starting point, as I said earlier on, is the fact of whether a company is backed by a VC investor, because the presence of the VC investor is what gives lenders like us the confidence to be able to go in and lend to a company that's essentially otherwise losing cash every month, and otherwise doesn't have collateral, right, to provide. When you go to a typical lender, they will ask you, and as you pointed out, the same issues that lenders face. If you don't have cash flow and you don't have collateral, it's very hard to underwrite a loan. So a venture debt provider looks at other metrics or looks at other forms of support in a company that give that lender comfort that the loan will get repaid. And having a VC who's put in a large chunk of money in the company and is willing to support the company by being at the board, helping the company navigate through difficulties, and also putting in more capital when needed, is a very important factor in giving us lenders comfort that the company will survive and be able to repay the loan. So I think that's one and the most important filter. The second is really whether the company has a business model that is likely to raise further equity interest in 12 months or 15 months from now. Because as long as the company raises a further round of capital, my loan in a sense is safe, right? Now, so today, if you were to bring a company to me that's, let's take something out of a company that's doing e-commerce, for example, right? Plain traditional e-commerce. Unless it has something unique about it, it's very difficult for a VC to get excited about putting money into this 12 months or 15 months down the road. Which means that while the company may have raised a round of capital today, there is no confidence I have that the company will continue to raise money in the future and therefore repay my loan. So I have to be very aware of the kinds of business models that investors are looking to invest in, not just today, but 6 months, 12 months, 15, 18 months out. And the third filter is really is, in a sense, does the company have the team, the founding team, the firepower to execute the business plan and to really take this company to a different level, right? Because, like I said, even in the case of Prism, there are hundreds of ideas, but it's all about the execution, right? That's not a secret. I mean, everybody knows that. It's a cliche, but it's a very true. I mean, that's what makes it a cliche is that it's true. Is that execution is everything, and ideas are not as important. So I think it's many different things, and for us, in some ways, assessing the credit of a company that's looking to borrow money is more, in some ways, an art than it is a real hard science. It's being able to read the tea leaves in some sense.
And on that point, I'm so glad you talked about being able to read something, because from what I know and from what I've heard, you have this amazing ability to consume a lot of this data and really put the startup into sort of a model and be able to quickly figure out whether the business is going to work or not. You have this amazing ability, but how important is it for a startup to actually be able to process or be able to put all of this data into a spreadsheet for themselves? So how important is the value of, I guess, data collection and data analyzing for a start?
You'll have to repeat the question, please, for me. I'm not sure what I lost you in little bits.
So
But
what I was saying is that what I've heard and I've heard about you as well as an investor, because you're an angel on a few deals here and there, is that you have this amazing ability to understand business models very quickly. Put a lot of data around them, put them in a spreadsheet, figure out the model, and be very, very pinpointed in your approach on why something works and does not work. Right? How important is
yeah,
it?
can I say? I think you're being too kind. I'm not. I'm not that smart. I'm luckier in life than I'm smart. I can tell you that. And what makes a good story from a debt perspective is very different from what makes a good story from an equity perspective. And while I am proud of my background in debt and what we've done over the last 15 years, I'm certainly not proud of my equity investments on the personal side. So I won't talk about that because that's been 0 for 10 right now. No, I think data is very important. But I think at some point it's not about the data. It's about being able to connect the data. See, look, you'll either never have enough data or you'll have way too much data, right? And I think sometimes you've got to step back from the data and look at the broader picture that's emerging and take a call on that, right? And I don't know honestly what process underlies that when founders make it, but some people are just better at it than others are. And sometimes you can look at a trend and you can pick up on something that others can't, right? And
Sure.
look, I don't think I'm that. I don't think I can beyond a point. I can't. I don't give myself credit for that. I do have smart people and partners in my team who can do that. I can't. I'm probably better at reading at some level, from a broader picture. But again, we all have our graveyards. We don't talk about all the missteps we've taken, the anti-portfolios we've had, the missteps, the blow-ups, the mines that we've stepped on. So, the only thing that people talk about in the success is they don't talk about the failures and the things that haven't worked out. So,
So
thank
with
you
that,
for your kind comments, but they're not entirely true.
well, I have it from very good authority that they are, but I will take your word for it. But with that, I think there are so many more topics, but I think we're already over an hour, so I'm going to take you to rapid fire very quickly, right? And then we'll see if we'll
Sure.
come back and talk a little bit about the social work you're also doing. But so rapid fire is very simple. I'm going to ask you about 10 to 12 questions, right? You're just going to quickly answer whatever first comes to mind, and we'll
Oh
see. I'm
boy.
sure there's going to be something that's going to come out, and we'll talk a little bit more about it. So good. First question. It's a Peter Thiel question, which is one thing that you know to be true, but very few people agree with you on it.
That most of your success in life is out of luck and not out of a plan.
Wow. So, but it seems that in a way, but your life is all about the plan. Like you
No, no, my life is not about plan. My life, like I said, is about luck. It's about having had an idea, but then being very, very lucky to find myself in front of the right people at the right time. Okay, so that's why I said when I said it earlier, I'm luckier than I'm smarter, and that's the way it is in
well,
my life.
some people would say luck is preparation and perseverance meeting with opportunity, which so you were prepared.
Which
You
is
were
serendipity, which I agree.
yeah.
It's serendipity. It's not luck, it's serendipity, and I grant you that. But to me, I think a lot about starting from, not to get too philosophical about this, but it's starting from where you're born, right? You're
Yeah.
born, I mean, I'm lucky to have been born where I am. I could have been born in so many other circumstances which wouldn't have even given me an education. So I think
That's
starting from there, how my life has been lived, how I met my wife, is so much of luck in your life that you really have no control over.
very, very true. I mean, I completely agree with you on that. I'm just saying that you have to be prepared when the opportunity arises. You have to be prepared to be able to swing the bat
Fair,
and hit for the
fair,
six.
fair enough. Fair enough.
So, one piece of advice to founders about fundraising.
Take money when you can, not when you need it.
So true. We just talked about it last week, in fact. So take money when you can, not when you need it. Who is your favorite superhero?
Oh boy. I don't think the perfect superhero has been invented yet. Because I think to me, the perfect superhero would be one who have the ability to speak and understand almost any language that's spoken. I think that's the most important skill that you can have to pick up language. Because when you pick up language, you pick up the ability to communicate with somebody at a very different level
And in their language as well.
in the
But
language.
in that sense, maybe then would you say Batman is your favorite?
Batman, yeah, well, he has no real super ability, right? So I think that's the thing that he's known for.
Uh, quick question. Scaling before profitability, profitability before scaling. What would you recommend to a founder?
Now, profitability before scaling. It depends. It's never a simple question because it depends on the circumstance you're in. I think the days gone by when you could get lots of money and have lots of latitude to burn money is gone. I think now the focus is on being a lean cockroach startup rather than being a fat dinosaur one.
And so true. And these moments happen every 5 years. I think this is just a reminder again that business hasn't changed. It's still revenues minus cost is equal to profit and not the other way around. So, good. If you could pick the brain of one person for 24 hours, you could ask them anything you wanted, who would that person be?
I would say it would be Nassim Taleb.
Oh, wow.
Because I think my worldview of prediction making, of financial modeling, of all of the stuff I learned in finance in B school has been upturned after I read his books. I think very few people, him and maybe Richard Dawkins, who's another author that I think has had the most amount of influence in changing my opinion on things.
And he would be so much in demand this year, right? Everyone's been talking about his book, pretty much.
Yeah, but which he claims is not a black swan, right? He says it is a gray swan. It was always predicted.
True, very true. That's true as well. Yeah. One thing you would like to change about the Indian startup ecosystem, and you've been in it for now, 15 years.
Yeah, I think, Kanal, I'll not be popular for saying this, but I think that VCs need to let dying companies die more quickly. And because, it's a waste to try and keep a zombie company alive, and you're not doing anyone any service. And when a company dies, nothing happens to the people. The people go and find new ways to do things. So the sooner you tell someone that this idea isn't working, cut loose and go and do something else, I think the better it is for everyone.
Yeah, absolutely. And I think they may even be throwing new money at it, but what about the time? I think the time is something you can't take back, and it's so true. Just cut them loose. It's so liberating actually for the founders to know, what, I'm done with this. Whatever was not working, I'm done with it. Let's move on to the next one. So true. I guess you talked about it a little bit, but then which company in your anti-portfolio hurts you the most?
I don't have one actually. I'm trying hard, and you would think in 15 years I would have collected something. I would have missed something, but I don't. I don't think so. Oh, wait. I would say there is one. It is a company I didn't do because I didn't have my approvals at the time, and that was Biocon India. I could have done mentioned it at Biocon in 2004 or Mindtree at 2004, which I had an understanding with the founders that we would do some tech there, but I never got my approval in Citibank to do it. I mean, 2000, not 2004, 2000.
Wow, those would have been storied starts, right? I mean, Biocon, Mindtree. Wow, those are massive anti-portfolio.
And one more, and now that I've thought about it, I think Make My Trip, because we had again there I had the option to do the deal when we were just setting up SVB, and I didn't have my license then. So we couldn't lend to them.
Most of them were things you would have done.
So they're not strictly anti-portfolio, but they were just opportunities that I missed because I either didn't have the program in place or the approvals in place or whatever it was.
I know we see each other in the morning at PDP, but are you typically a morning person or a night person?
Morning.
Morning.
I
So
typically like to wake up early and get out.
if writing an email, guys, you know what time he's awake. So
Well, I should also say I have a DND on my phone set up. I don't look at messages or mails before 9 a.m. and nothing after 9 p.m. Typically, I put my
perfect.
phone on DND mode.
I'm so glad we have you for tonight, though. We've got two more questions and we're done. Uh, and I know you're a very avid reader, so I'm actually going to ask you a couple of these now. Three books you would recommend to any founder starting out, or whether they're already doing this. Three books they should have read or should read.
So I'll say this. I alluded to this when I said Black Swan.
Mhm.
And in fact, I would say that entire series of his books, Fooled by Randomness and so on, the entire series up to Skin in the Game. I think Skin in the Game particularly is useful for people to understand how they take risks and more honest risks with higher integrity when you have skin in the game. So I put that as one. I would put um, I put Malcolm Gladwell, and in fact any of his books there, maybe Outliers.
Blink. I
Um,
think Blink is such a very important one.
yeah, yeah, all of them. There's so many. And there are many books that I don't know if they strictly apply to founder mindset, but they're just wonderful books to read. And I like to read across nonfiction. I generally don't read too much business though.
Okay.
I got it. But I
And
can. Sorry.
no, so and I know you're a very avid podcast listener. So if there was a podcast that you would have recommended to someone, right, and you recommended a few to me, so I know I follow I follow some of the. I mean, some of them are really long, but there are some that were so amazing that I still follow them today. But any one of them that you would recommend to the audience today?
So my regular listening, I listen to it every week. It's a 1.5 hour podcast. So I typically listen to it over a day or two. Is one called Skeptic's Guide to the Universe, and
SGU.
that's what I listen to when I walk. When you see me in the mornings and we wave to each other, that's what I'm usually listening to.
That's the same one that I follow too. I mean, it's an amazing conversation. If you haven't heard it, just hear one episode. It's
Yeah.
truly an amazing conversation. Uh, no, great. I think there's so much info. I could have gone on for a lot longer, but thank you so much, Ajay. We're done with the rapid fire part of our conversation, and it's truly has been an amazing conversation. I think that it's a very unique journey of a person who goes from an operator or working in a large bank to being an entrepreneur, then an entrepreneur, and now a venturepreneur. Which and honestly, I think the work that you guys are doing, and I keep sending some startups over to you as well. The work you guys are doing, the work that is required to be done, is so immense. We need another 10 Ajay Hattangdis out there promoting, putting up.
Thank you.
Startup ecosystem needs debt, and I can tell you that you're one of the only guys that is truly doing it, right? Because the banks still haven't figured out how to lend to startups.
you.
So you're doing an amazing job. Thank you so much. Any final words for the audience, for us?
No, I am just happy to be here. Thanks. It's wonderful speaking to you. Glad I could speak to everyone else too.
Thank you very much. Have a good night, everyone.
Good night, guys.